Hello and welcome, as it is the 6th day of February 2017. Let's do some Fibonacci analysis within Bitcoin. Take a look at this chart. However, this is a logarithmic chart. I am by far the vast minority of other types of people that do this kind of stuff. Trade. Look at charts. Look at Fibonacci. Oh, this is what this video is about. You know that by the title. And the logarithmic makes things look better in perspective for how the moves play out. Because this move up here really happened. It really went up. And people were excited when it got to 1,000. 1,100 rather. And then it falls down to under 8. Ooh, man, people were flipping out. Maybe not as much as they are now, but they were flipping out. Let's take the log scale off. Ooh, it looks like the crash is in full force. Yes. Okay. First thing is first. One amazing buy opportunity now regarding Fibonacci analysis. We'll see why. 5,000, not a good area. Nope. I don't like the 5,000 buy. Not anymore. It's a major area where we came from. I don't like it. Okay, we'll see when we do the analysis. Let's go back to the log chart. Now, Fibonacci is a name of somebody who tried to just play around with math numbers. I think it was how many rabbits had the rate of increase for them, although that reason is irrelevant. And he came up with what is a very simple formula and an amazing number. 0.6103, I think it's 899. Well, I got the exact number in the spreadsheet. So therefore, I'm going to go towards it. Those whom like math, binary, and of course spreadsheets, I can show you how we would do this. And I have a spreadsheet here. And what I do in the first column is I put the number 0 in. The no in binary. The yes in binary of 1, and the rest of the way is equals A1 plus A2, which 0 plus 1 is 1. And copy and paste that all the way through. You got the Fibonacci number sequence. You start with the two binary numbers, and you continuously add the two previous numbers to each other. Now, interestingly enough, if you divide one number by another, say this one by this one, or 55 divided by 34, you get 1.617, which is close to the 1.618 number. And if you divide it by the other side, well, 61.8, I'm going to copy this and do this on some deeper numbers. But we can see the numbers get larger and larger. So in here, we've already got the exact Fibonacci. 61, at least for these amount of decimals, 61.8033989. That's the number. And if you divide it either way, it's amazing how you get the exact same this intrigues me seeing how this works, the two numbers like this. I actually love the Fibonacci ratio, but as we can continue on, I went as far as I could until my computer couldn't handle these numbers anymore, and I'm using these as the calculations. I don't want to give away the numbers now, so I'm just going to do this, but I already have the mathematical numbers calculated. For the key Fibonacci levels, we're going to talk about small time Fibonacci and the main ones. The main ones, again, say bind. I'm just going to, what do we got? Yep, see it says num here. So I can handle 308 rows. This is, or 308 number decimal digits. That's a pretty big number. Therefore, if we go through this part of the spreadsheet, this is one number divided by the other, and then the same thing again. So those two numbers I show, this and the decimals beyond this are better than perfect. So as if it really makes a big difference, but if you like to play with exact mathematical numbers, and I kind of do at times, especially when computers calculate it for you, then yes. So what I've done with each of these rows Basically, this is 61. This number multiply itself equals this, which is 38.1966%. And then as it goes further, I take this number and I multiply it by 61.8, or this number again, brings me 23. And I keep multiplying this number by the Fibonacci ratio on top, and the numbers keep getting smaller. Column F is 1 subtract the number, or the opposite of such. Because for Fibonacci, what I'm going to do is I'm going to take the highest price of a key level and then divide it by the lowest price. And I'll put it to the root, the exponent of this particular number, and then multiply it by the low. This number here, okay, I don't want to give the numbers up, but this number here at 38.2 area is, if it breaks down below this, the bull market was destroyed, and it's probably not looking good for its near future. This is the number it needs to stay above to remain in a bullish trend. This is the number whenever it has any parabolic serious move, hence the case yes, that if it comes down towards it, that you have to take this level very seriously, and can oftentimes be a level which sparks the market. That's where we are at now. And these numbers, I'm going to say, are nonsense, although I've looked at them short term, they all work very, very well. So then, let's take a look at what the key high and low happens to be on this Bitcoin chart. We have a high in here of 19,666. The lows on the early parts of 2015 is in at 152.40. So those are the numbers in which I'm going to be going with. So let's get started with the analysis. This will be a long video. And now let's go over the numbers. So this is the low, this is the high. The high divided by the low is 129. So from that bottom, if you bought that bottom and sold the high, nobody, I think, could ever say that truthfully, then you would have made exactly 129 times. And there are many people that can successfully say they did make 50, 60, or whatever times, 48, 30, because that created many more mathematical possibilities. Okay. The first small whatever number is 18,447. And really for all three of these, we're just going to quickly take a look at it. And even to a degree, this 15,000 number. This number played out big, as did this one. This is the one that just hit. This is the one I state in a parabolic move. This is the one that you have to give extreme. You have to extreme. It's a high probability, or it's not a surprise if it's support. Now we got that 5,000 level that I talked about, but it doesn't come in here. 3,072 is the next level, so it needs to stay above and hold above 3,000 to remain in a bull market long term. If it holds and stays below the 975 mark, that is the end of the bull market. And that 1,000 key area is relatively massive on a psychological level, but this is never about psychology. This is always about mathematics. Okay, then, so let's take a look at the first small one, 18,450, we'll say. 18,450. What we're going to do is I'm going to have to shorten the time frame and just go back in time. It's really the only way that can be done. So that's what we're going to do. I'm going to do, and you can watch along. So what I do is I just take that mouse and I just make as many, and I just move this thing back so I can see the previous points pretty well. So reduce the amount of periods and place in a horizontal ray within that level. Again, that number is 18,450-ish, a little under. That's good enough. So on the earliest beginnings, from the all-time high on December the 17th, price action had a pierce above, a large pierce above, but this is a spot where I talk about, can it stay and hold above it? See, it had a big move down here, but it stayed and held above this level at least until the end of it, because it managed to not stay below it and quickly recover and get above it. And then twice that level came in as a mark of support. I'm going to keep it at the 30-minute time frame. The next key level below that was 17,773. So let's place another horizontal ray in. Okay, so again, it pierced above it here. Nice little hit on December the 19th. This level was not support. It's a key level, and it hits well below it. The next level below that was 16,634. So we'll put a horizontal ray in there. Now in this situation here, it really never was a big time where it was resistance and support. I mean, it was here, but I mean, there's so many different areas, and it was here again. But it did stabilize the move from December the 19th through December the 21st. The 17.7 level was resistance on 2 different occasions as well. Again, these are all short-term levels that are very common, that if you were to take a look at this, every time the market makes new all-time highs, you could kind of look at these levels, I suppose. And the low would always be the same, but when it breaks it, say it goes to like, say, 26,000, and then you can look at the numbers and it would just calculate it to what it's supposed to. Continuing further. Below the 16 level was about 15,000, which we can see. I can put the line in now for that. That'll work. 14,991, yep. So support comes in at the 15,000 mark. Doesn't come to this Fibonacci mark, so barely makes a move higher, but then support was weak, resistance was strong. As it broke through it hard, that's what it does when it's a big non-support level. If it's going to fail, you're probably going to have a significant move. The next price below that was 12,687, which pretty much works to this low. Close enough. So the resistance comes in here, price action falls all the way down to the next key support level. And just like before, has its rally. If you're always thinking Fibonacci is going to work perfect for you, here's a case where not. Oh, the buy was great, but if you look to sell here, I think sometimes you're going to do well. Although in a bear market, that would be a matching high. And technically speaking, I probably would have said 18 average of highs if you were to play it that way, or accumulate for the long term and just keep buying on the way down, either or. And that means you don't sell, not anywhere near now. Anyway, we see the market has another support test of this level. It doesn't stay below it, so it held and stayed above this level again. This time it comes very close to this previous resistance, pierced below. Now it pierces above. And in its support test, we can see it failing on December the 23rd at 1800 hours. And then right back down to this key support level again. Find support again. Bitcoin makes it to resistance of the 15, supporting it, making a nice move, coming up close to the previous resistance on Christmas. And now, as we move forward, we can see that support doesn't hold. So the market's just finding resistance again at the 15, supporting the 12 change multiple times. This is what it's doing, and we're now into early parts of January. But I'm going to pause this and change the time frame from the 30 minutes. It's going to take too long. And I'm going to do so with a 2-hour time frame, so 4 times larger. So there's more resistance in the 6th day of January at the 17 level. Resisting and supporting again this point. Now at this key 12,000 level, which we can see was supported on a couple occasions, now it's giving in. So 10,000 was that next level below that. Place the horizontal ray in there. So there's your support at 10,000 up to key fib as resistance. It retraces back down to fib again. This is telling me this is a valid Fibonacci point when it keeps doing this. That's what it really does. So I like that fact there. There's support being tested again, breaking down below resistance. And of course, the next level below that, as I state, 62.43. Let's just take this to current time frame. And there we have it, down to the key support level. I don't think 5,000 is going to be anything more than short-term support. Meaning, if it breaks down below where we are now, it's either going to go to about 5,000, maybe resist this area of around 63, then fall down to 3,000. Or it would fall down to 5,000, quickly rise back up to the 6,300 level, probably almost like within the minutes or hours, and then create that failed move, fast move to the upside. Those would be the two situations there. But I would not be surprised if people who have 5,000 order bids will either not get them filled or will realize they could have got them filled for 3,000. Let's take a look at that 3,000 level on the more long-term time frame and place a horizontal ray there. We will use the weekly time frame for such. As you can see with those upper numbers that they're all short-term analysis, which we were using on those time frames. So there's 3,000, which represents, it's basically as big as 5,000 is when you look at how its technical analysis is. Only 5,000 is the next level and a higher number. And people don't want to see 3,000 Bitcoin that are long. But the nature of a roller coaster ride. Now, if we pick this, take the log chart off this and take a look at this linear, again, like we shown earlier, that's what people mostly see. I look at this way and I'd rather do so. And the next level, which was 1,000, let's place a horizontal ray in there. It was a little under 1,000, but that's where it'll go. I'm going to have to extend this. We'll do that when we go to the monthly chart. Now, if you really wanted to have fun, you could try Fibonacci analysis from the $2 lows. I might one of these days. You know what? I'm going to do it. $2.21. Let's do it. It's not like it's going to be hard. 8,800 times your value. Wow. Okay. Now on to the mathematics. I'm going to have to probably change the formula here because of how it was written for me. Okay. So on the longest of term time frames, anything below 71 would pretty much kill Bitcoin. On the most longest of term Bitcoins, as long as it stays above 600, it remains bullish. We do have a Fibonacci point at 2300. We do have one at 52. And now I want to check the 86 and the 11.8. 86 and the 11.8. 11.6. Well, I mean, 11.6 is the perfect support here, so it's working too as well. Interesting. And then 88, I think it was. 86. Not really too much, at least not on the daily. '86 was this basic area, but it didn't do too much here. But when it broke down below, it had a big fall, so it kind of did. Given how big these numbers have worked so far within how I look at it, like I just stated before, I'm expecting this to be the bottom. Or, like I stated, the alternate. Move to 5,000, fast move higher. Or basically a move to 3,000. And that to be the bottom. Thank you for tuning in to today's Fibonacci analysis video on Bitcoin. I don't think anyone comes even close to doing analysis in this sort of mathematical level. Because when I started trading, I would look at Fibonacci analysis, and I can show it here because it's nonsense. Mathematically, it's like this is almost, quote, for lack of better terms, it is an insult to my mathematical brain that I'm even looking at what they offer me. I've never even used Fibonacci on this site, but I'm going to try. Okay, let's move this on to the monthly time frame. Actually, no, I want to do it from the 252 low, or the 150 low. I'm used to saying 250 because that's the gold low. The gold low is 252, and I got that number like memorized. Even the day doesn't work. Week would work. Okay, where's Fibonacci? I think, is this it here? Fib retracement. See, now if you look at it, the 61.8, it just doesn't mathematically make sense for me. So that's why I refuse to use it. The only way I'll use it is the mathematical formula. High divided by low to the root of the Fibonacci extension you are looking for. Multiply the low. So be it. Now, as far as Fibonacci upside is concerned, you might as well take a look at this now. That's Notepad. I got all my... There we go. This is the one I've already calculated. I could use a spreadsheet for this too, but we're already looking at an upside target of over 42,000 on the break of 20 as it is. And if it goes to 3,000, that number would only go higher. Have yourself a magnificent day. If you have any questions, please leave them in the more information box. Take care.